Here is the U.S. market summary for Thursday, July 17th, 2025. U.S. stocks finished higher on Thursday. The market, which had been shaken by uncertainty surrounding Federal Reserve Chair Powell's future, rebounded on the back of strong economic data. Cyclical stocks rallied, bolstered by an increase in June retail sales and a decrease in new jobless claims. Technology stocks also saw gains, driven by a positive sales outlook from TSMC. After the market closed, Netflix announced second-quarter earnings that surpassed expectations, though its stock fluctuated in after-hours trading. In the bond market, the 2-year Treasury yield rose while the 30-year yield remained nearly unchanged. The swaps market continues to price in fewer than 2 rate cuts from the Federal Reserve this year. In the cryptocurrency market, the industry secured a significant victory as the U.S. Congress passed a stablecoin bill. June retail sales exceeded expectations, alleviating concerns about a slowdown in consumer spending. This suggests that President Trump's tariff policies have not yet significantly impacted consumer expenditures. Furthermore, major banks reported during this earnings season that consumers remain in good financial health. Meanwhile, initial jobless claims fell for the 5th consecutive week to their lowest level since mid-April, indicating a robust labor market. Chris Zaccarelli of Northlight stated, "As long as the economy continues to expand and the unemployment rate remains low, people will continue to spend, creating a virtuous cycle for corporate profits and stock prices." Jamie Cox of Harris Financial Group commented, "It appears that consumers have moved past the tariff shock from April and have resumed spending." David Russell of TradeStation noted, "Spending revived in June, and other data points like initial jobless claims and the Philadelphia Fed Index showed a solid economy. This is positive for overall growth, but it makes it harder to justify a rate cut." Neil Duda of Renaissance Macro Research advised caution, saying, "Although retail sales beat estimates, optimism should be somewhat tempered considering the rise in consumer prices during the month." Estelle Au of Bloomberg Economics remarked, "Given the price increases across various product categories, it is difficult to clearly distinguish whether this rebound was primarily driven by higher prices or by solid underlying demand." Brett Kenwell of eToro said the reassuring retail sales results came at an opportune moment as earnings season gets into full swing. Mike Wilson of Morgan Stanley, while forecasting a long-term bull market, warned of a potential short-term correction. He predicted the S&P 500 could see a correction of 5 to 10% this quarter as the impact of trade policy is reflected in corporate financials, but added such a decline would present an attractive buying opportunity to enter a rally led by improving earnings expectations. Opinions within the Federal Reserve on the future direction of monetary policy were divided. San Francisco Fed President Mary Daly argued for proactive measures, stating, "We need to act before it's too late," and suggested that 2 rate cuts within the year would be reasonable. Governor Christopher Waller, despite low market expectations and Chair Powell's cautious stance, strongly advocated for a 25 basis point rate cut at the July FOMC meeting. Waller explained, "With economic risks, it is better to act sooner than later." He noted that a slowdown in private employment is a red flag, and with inflation already near the target, the Fed should act preemptively before the labor market deteriorates further. He added that the impact of tariffs on prices is transitory and should not be a factor in policy decisions. Conversely, Governor Adriana Kogler maintained a cautious stance, stating that the Fed should hold rates steady for now, citing inflationary pressures from tariffs. News emerged that President Trump is expected to sign an executive order, possibly as early as this week, that would permit alternative investments such as cryptocurrency, gold, and private equity in retirement accounts like the $9 trillion 401k market. Meta has added Apple veterans Mark Lee and Tom Gunter to its Superintelligence Labs team, just weeks after poaching their former boss, Roman Pung, with a pay package exceeding $200 million. Gunter's deal is reportedly valued over $100 million.